Oh, all right. So you can see my screen.
Yeah.
Okay. So I guess we stopped at, okay, so we have recorded the gains on disposal of trade investments. Then we have recorded the sales proceed of trade investment. That's an investing activity. Okay, so
Mm-hmm.
let us, okay, now, so we are on information 2. So information 2 says that there was an issue of 3,750,000,000 ordinary shares during the year at a premium of 32 kobo per share. So now let's go to the issue of share, ordinary shares. So this is it. Whenever shares are issued, and last year, you look at the difference between last year's shares and this year ordinary share, and there is an increase. If there is an increase between the difference between last year ordinary shares and this year ordinary shares, represents an additional issue of what? Shares.
Shares.
Now, let's do this first. First thing, anytime shares are issued,
Yeah.
to check how the shares was issued. When shares are issued, we pay or we fund issue of shares through the share premium.
Yeah.
Now, so the first thing we are going to check is, look at your retained earnings. Let us do an analysis on the retained earnings. Let's do an analysis on the retained earnings.
Okay.
So now, if we do an analysis on the retained earnings, we want to see if that retained earnings, if part of the retained earnings was funded, if part of the shares rather was funded using the retained earnings. You know that the normal reserve that we use to fund issue of shares, share
Yeah.
premiums. Now, if we fund issue of shares, share premium, and the shares are not, maybe we can't fund the whole shares using share premiums, then we can fall back to our retained earnings to complete the funding of the share. So, but the first thing to always do, test your retained earnings. Now, look at the balance. Let's confirm the balance in our retained earnings. Balance brought forward. Now, balance brought forward for retained earnings is how much? 13,860. That's last year's balance.
Mm-hmm.
Now, you add your profits for the year. Add your profit for the year. Now, what's the profit for the year? The profit for the year is on your profit or loss statement. That's how much?
9,465.
9,465. So
Yeah.
let's bring down our closing balance. Balance carried down. So what's the balance carried down on the retained earnings?
17,925.
17,925. So I'm saying that the difference between the opening balance of your retained earnings, the profit for the year, and the balance carried down must give us dividend paid, because dividend are paid from your retained earnings. You pay dividend to the share from your retained earnings. So the difference between when you add the opening balance of your retained earnings and the profit for the year, when you add them together and you deduct your closing balance, whatever difference you have must be the dividend paid. So if that difference you have does not give you dividend paid, like does not give you the whole amount of dividend paid. So it means that retained earnings was part of the reserve that was used to fund the new issue of what? Shares.
Shares.
So let's add this, let's add it together. So if I had 13,860 plus, so let me do it like this: 13,860 plus 9,000
I don't want to forget my calculator.
minus 17,925. That will give me what? 54, right? So let's check the additional information. Let's see what's dividend paid. Now look at it. Look at additional information 4. They said during the financial year, the company paid a dividend of what? 5,400,000 to equity holders, and this has been accounted for. So this 5 million represents your what? Dividend what? Paid. So it means that the retained earnings was only used to pay dividend. We did not use the retained earnings for any other thing. So that is to tell us that this 3.7 billion ordinary shares that was issued, that was raised during the year, is as a result of the increase from last year's shares to this year's shares. So let's check it. Let's check it very quick. Ordinary shares. So my ordinary shares, let's check the opening balance. The opening balance of ordinary shares is how much? So look at the ordinary shares now. 11,250. Now the closing balance carried down of ordinary shares is how much? 15,000. The difference must give us that 3,750,000. So let's check. Equal to this minus this is what? 3,750. Let me make it like this. Equals to this minus this. So you can see. So this represents cash issue. Cash issue of shares, 3,750. At the end of the class, I will send the sheet and the recordings for you so that you are going to go through everything again. So this represents the cash issue. So it means that what the shares were issued at a premium as a result of what? The increase, like the increase in the ordinary share during the period was as a result of the new issue of what? Shares. So the same thing, let's do our share premium as well. Share premium. Now, some people will usually add both the ordinary shares and share premium together. It's not bad. But before you add it together, you must first check whether that share was issued using the share premium or retained earnings and share premium before you start adding both together. Balance brought forward. So for share premium, the balance brought forward is what? 9,3. The balance carried down is what? How much? 10,000. 500. So the difference will be what? Minus. That's 1,200. So this is another cash issue. So the idea is your financing activities are financed using equity and liability instruments. So you finance activity using equity and liability instruments. Let me call this 4. So Any increase in the ordinary share for the period represents a new issue of shares during the period. Do you get?
Yeah.
Any increase in the share premium represent a new issue of shares as well for the period, because when you issue share at a premium, it's definitely going to add up to your share premium account.
Yeah.
So if the ordinary share capital was constant at 2,250 for both years, it means that we didn't issue new shares for the period. Definitely the share premium account will be constant. It means that there was no issue of shares. But if we had issued shares for the period, it means it's going to give a rise to the ordinary share capital account. And automatically the premium account will be what? Added up.
Increase.
So issue of shares is a financing activity, and your share premium, increase in your share premium is a financing activity. While dividend paid is a what? Financing what? Activity. So let me do my this thing. Okay, so okay, so let's post. So financing activity, dividend paid. Dividend paid. Dividend paid. So how much is our dividend paid?
5.4.
So this 5.4 is supposed to be hey. This was the
We'll give you the same answer now.
I know, like it's supposed to be a negative, but anyhow, sure.
Supposed to be a negative.
Yes. But it's fine, 5.4. Dividend paid is what? 5.4. 4. Then what else? We have what? Cash issue, right?
Issue of share.
And for both share and share premium, Abi. So increase in ordinary shares. So increase in ordinary share gave us what? Increase in ordinary share gave us 3,750. Then for share premium is
-2.
No, that's an increase, it's an inflow. You know, dividend paid is an outflow.
Yeah.
So this one is 1,200. That's increase in share premium. When there is an increase in ordinary shares and increase in share premium, it means that there was an inflow. It means that we received cash during the what period.
Yeah.
So we have dealt with. So you can see the ones we are dealing with now. I'm highlighting them. We have dealt with. Now this cash in hand, we have dealt with it. This short-term investment, we have dealt with it. So the thing is, there's no one-way traffic. It's not a must you finish. As you are doing it, be posting. As you are doing it, be posting. So long you understand the concept behind whatever you are posting. Exactly. So we have dealt with our share premium account as well. And we have used our retained earnings to confirm our dividend paid. So let me highlight this as well. Now the next one, they said delivery van with original cost.
Highlight IV
Okay,
now. Finish
which
IV.
which one?
Number
IV. I have
yeah.
highlighted it now. I've highlighted it. Let me use the green. It can't.
You have to change it to normal white. Yes, click them.
Okay, it has changed. Now, delivery van from the original cost of 6,600,000 and a carrying amount of 3,750,000 was sold for 2,250,000. So now, delivery van. So
That's the
another
PP.
asset now, yeah, is a part of it. Now they are giving us that delivery van now. So that's PPE, right?
Mm-hmm.
Now, but let's do that separate. Delivery van.
Mm-hmm.
Now, they said delivery van with original cost of 6,600,000 and a carrying amount of 3,750,000 was sold for. Okay, you know what? Let's do it like this.
Brilliant.
Let's everything PPE. Since delivery van is part of PPE,
Mm-hmm.
property, plant, and equipment. So now, let's bring down the balances on our PPE account. Now, if you see what they did here, you see that this is extract from
PP schedule.
PPE, exactly. So that's to tell us how this PPE was arrived at. Now, let's go. So opening balance of PPE is 23,475. You can see this is it here.
Mm-hmm.
Balance brought forward 23,475. Now closing balance. Balance carried down. How much is the balance carried down? 29,235. So now let's go. Delivery van is a property, plant, and equipment.
Yeah.
Now, delivery vans with original cost of 6,600,000 and a carrying amount of 3,750,000. So if you look at it, they've given us information pertaining to delivery van. So this delivery van too forms part of our property, plant, and equipment. But there is a disposal on that delivery van. So this is what we are going to do. You know that when we are transferring disposal, we transfer the carrying amount of that. We transfer the carrying amount of that PPE to the disposal account. So I'll come here. So disposal. And there's a disposal. How much is our disposal? So the carrying amount is 3,000. No. The carrying amount is 3,750,000.
Mm-hmm.
So 37. So disposal is going to be reduced, W.
Mm-hmm.
Now, what else? So there's an accumulated depreciation. So if you look at it, we are going to open another column for accumulated depreciation.
Okay.
So that we are going to get the total depreciation for the period. Now, on this same delivery van that was disposed, there is a depreciation on that delivery van.
Mm-hmm.
So the depreciation on that delivery van is how much? Now 6,600 minus 3,750. So the depreciation is 2,850. 2,850. Depreciation.
Sorry. How did you arrive at that again?
Like the delivery van costs 6,600,000.
Uh-huh.
and a carrying amount of 3,750,000. So the difference, how do you get a carrying amount? Cost minus depreciation, right?
Is that not cost minus carrying value?
No, cost minus depreciation will give you carrying amount now.
Okay. Okay.
So if the carrying amount is 3,750,000, so it means that there is a the delivery van has been depreciated by a certain amount.
Okay.
So the amount by which it was depreciated is 2,850,000. Did you get now?
Yeah.
So I'll come to this place. Let me come here and do another work case. This is supposed to be 7. Accumulated depreciation. So the reason why I'm doing this accumulated depreciation is we are giving the breakdown of the depreciation. We are giving the breakdown of the depreciation. So what's the opening balance? Opening balance.
2232.
Balance brought forward is how much?
22,320.
Now, balance carried down is how much? 26,160. Now, there's a depreciation on delivery van, Abi.
Yeah.
So, from our PPE, that's a depreciation. How much is that depreciation?
2,850.
Definitely is going to be so this is supposed to be minus 2,850. So at the end of the day, my depreciation is going to be 22,320, right? Minus 250, Abi. Minus 8. Then minus 26,160. That will give us minus 6,690. So 6,690 is our value amount for what? Depreciation. So let's check this PPE now. So our PPE, let's know the amount of cash paid for PPE. So let's go 23,475 minus 3,750 minus 2,850, right? Then minus 29,235. That will give us what? 12,360. That represents cash paid for what? PP is supposed to be 6. So remaining the disposal now. So let's go and treat the disposal on that delivery fund. So cash paid for non-current assets, we have said, is an investing what? Activity. Yeah, so let's quickly post this. So cash paid for PPE is what? 12,360, right? That's an investing activity. Cash paid for PPE. 12,000 what?
650, 650, 350.
12,360. Then sales proceeds on PPE. So let's go and determine the sales proceeds on PPE. So let me come here. Number 8, disposal of what? PPE. So let me use that one to determine any gains on disposal or what? Loss. So what's the carrying amount of that this thing? So the carrying amount is So
Three
let me
point 750.
PP carrying amount 3,750,000, right?
Yes.
Then sales proceed. So sales proceed is how much? We are told that the deliver was sold for what?
2520.
2,520. So what's that? Loss on what?
Disposal.
Disposal. So the loss on disposal is going to be this. That will be this minus this. That's going to be loss on what? Disposal. Okay, so loss on disposal is how much? 1,230. So that will be an operating activity. Loss on disposal. 1,230, right? Then depreciation. So depreciation. How much is our depreciation that we calculated? 6,000. Sorry. Yes, 6,690. 6,690. I know we are adding back depreciation. We are adding back depreciation. So, hey, sorry, we are adding loss on disposal because it's a loss. It has been deducted. We are going to add it back to our what? Profit. So, let's come here. We have dealt with this guy. Where's PP? We have dealt with what? PP. So now there's an intangible asset there, right?
Huh?
There's an intangible asset on your statement of financial position.
Yeah.
So let's deal with the intangible assets now. Intangible. Now we're not giving any information on the intangible assets. So let us just deal with this normally. So what's the balance brought forward on the intangible?
16,300. 16,300.
16,300. Now the balance carried down on the intangible assets was 18,775. So any difference will represent the cash we paid for what? Intangible assets. With opening balance is what? 16,300, right?
Yeah.
Closing balance. Okay. So any difference will represent.
There's an increment.
Yeah, there's an increment for intangible asset. Now, what if that increment was actually a decrease? What if it was a decrease? What if it was from 16,300 to 14,000? There's an amortization.
Okay, amortization.
Amortization. You know, it's an intangible asset.
Okay.
So intangible asset will always be amortized. So it's going to represent an amortization. But because it's an increment, so the increment represents what?
Outflow.
Outflow, exactly. So cash paid for intangible asset 2,475, right? That's an investing activity. Cash paid for intangible assets 2,000.
You didn't put sales proceed on PP.
Thank you. 2,475. So sales proceed on PP is how much? 2,500. That's going to be an inflow. 2,520. Okay, so now Okay, let's see. I guess these intangible assets. What is wrong with this mouse? Okay, so let's highlight this. Now, so let's go. They said the company is planning to take a long-term syndicated loan of 2
2 million,
2
2,000 million.
million from a healthy Nigerian bank. The
Nigerian
company's
bank.
financial statement and loan application have already been submitted to the bank and is awaiting approval. Now let's check our loan. Let's check our loan. I'm coming, please. Just hold on. Let's check our loan. Hey, there is something that we omitted from that PPE.
What is that?
The revaluation reserve. There's a revaluation reserves there. There's a revaluation reserves that we omitted from the PPE. Just hold on, please. So there is we omitted evaluation reserve. That means we have to adjust that our PPE again because of the evaluation reserves. We have to adjust that our PPE again. Okay, let's now let's first make adjustments for this. So look at, there's a revaluation reserves here. Can you see? So these revaluation reserves, you can see that there's an increase in the revaluation reserves.
Yes.
2,280 minus 9,195. That's going to give us 2,045.
The difference.
2,045. That's the difference. So that represents the revaluation reserves on. That represents a revaluation reserves on PPE. Revaluation reserves. So how much is that? 2,085. 2,085. So the cash paid for PPE will now be how much? Let's do that again. 23,475 minus 3,750 minus 2,850 now plus 2,085, because the valuation reserve will definitely be an inflow, minus 29,235. That will give us
10,275.
How much do we have before?
For where? Cash paid for PPE, it was 12,360.
Sure, you're not making a mistake. comment. Wait, please. Are you sure we are not making a mistake? Please just hold on. Checking the question. Mhm. What's the amount of our depreciation again? Our accumulated depreciation is 6,690 now, right?
Yeah.
Oh, okay. So this is where the error is. This 6,690 is what is supposed to represent the depreciation for the period. You know, what we recognized there was depreciation on delivery van. So this depreciation on, are you with me?
Yeah.
Yeah, this depreciation on delivery van is supposed to be an adjustment that we are going to make in the accumulated depreciation account. So because this is a PPE, we don't know how many non-current assets made of that PPE. Okay. All we just know is that we have a carrying amount on delivery van. So we can't use the value of delivery van alone to charge depreciation for the period. So this guy is supposed to be the total depreciation for the period. And the total depreciation here is what? 6,690. So let's change this one to 6,690. So it means that if we adjust this one to 6,690, let me 6,690. So this will give us 14,115. So this guy here is going to give us what? 14,115. Do you get that correction now?
Yeah.
So 14,115. So we have included our evaluation reserves to it, right? Okay. So okay, 14,115, 2,475. So proceed from trade investment disposal 1,885. Proceed on PPE 2,520. Acquisition of intangible asset 2,475. Then for trade investment 475. Okay,
Yeah.
I think we are on point now. Okay. So dividend paid is 5,4 B.
Dividend paid.
We are giving in the question now 5,4, right?
Yes.
Okay. All right. Okay, I think any error is corrected now. So let's finish up. Now, so what else? So let's do the loan. So let's look at our loan now. Loan. So look at your loan. Let's just do that. We don't have to make adjustment for that. So there was an increase in our loan. There was an increase in our loan. If you look at it, last year loan was 6,500, right?
Yeah.
And this year loan is 12,750. So let's check the difference. 12,750 minus 65. That's 6,250. Now you know that loan, capital, equity, shares, they are all used in financing activities.
Yes.
We raise capital through issue of shares. We raise capital through issue of what? Loans. Our loans and shares will form a major part of our financing activity. Yeah. So, and if there is an increase in it, it means that we raise
more inflow.
Exactly. So, increase in loan.
Maybe when you buy one, that will be like 10,000.
So, how much we now?
Maybe the more you buy, the lesser the price.
Oh, wow. I'm supposed to bring all these things up. I'm supposed to bring them to this side. So how much is that? So I said this is 6,250. That's an inflow of 6,250. That's an inflow. Okay. So I think loan is dealt with. So we have tax.
I think we still have
dealt with
some additional information now.
I'm coming. So this last one, they said the company is planning to take a long-term syndicated loan of 2 million from a healthy bank. The company financial statement and loan application have already been submitted and is waiting approval. So we ignore that information. It's a plan, like they've not. It's not something that has already been incorporated. They've not implemented it. So we are going to exactly going to ignore it. So let's ignore. So I think that is that. Okay. Now, if you look at it now, don't forget I started by saying you add your finance cost, Abi, and you less your interest received.
Yeah.
So interest received is an investing activity, while interest rate is a financing or operating activity. So this our interest received. How much? You know that we deducted our interest received from our profits before tax.
Yes.
So we are going to come back here to now to investing activity. Interest received. So the meaning is that what the total interest expenses, sorry, the total interest income that we earn for the period we have already received it. You understand?
Yes, I do.
It's that total interest expenses, the total interest income for the period, and the total interest expenses for the period has been. So, how much is our interest received? 1,670. So let's 1,670. Okay, we are getting to the end of the question. So the next thing is our finance cost, Abi. So you know that we don't have any adjustment for finance cost. If you check your current liability, you see that we're not having any accrued interest.
Yeah.
So
just add it back.
Since we don't have any accrued interest, the finance cost we just deduct it. That's going to serve as your interest rate. But before then, let's do our changes.
Wait. Where did you put your interest received?
Investing activity.
Okay, sorry, I missed that.
Investing activity. So let's look at inventory. So was there an increase or decrease in inventory?
Inventory was an increase.
Increase in inventory. So increase
in outflow.
Exactly, inventory. That's going to be what? That's 11,550 minus what? 7,875. So that will give us 11,550 minus.
Yeah, you're correct. No? All you
No,
can do
is an outflow.
yeah. Minus 11,550.
That's going to give us is an outflow. Now, trade and other receivables. There's an increase in trade and other receivables as well. Please,
No, it's outflow too.
here is an outflow. Trade and other receivables. Of how much? That's going to be, that's what? 31,440 minus what? 25,335. So it's going to be, since it's an outflow, 25,335 minus 31,440. So that's an outflow. So we have dealt with these two like that. So you can see the way I'm dealing with them, how I'm highlighting them to show that we have dealt with it. You can see that it's not hard, it's very simple. Then trade payable. There is an increase in trade payable.
Increase in trade payable. Yeah.
So increase in trade payable represents and what? Inflow. Exactly. We are catching it. Increase in trade payable. So that's how much?
12,810
minus 9,110. So increasing, so that will be 12,810 minus 9,150. That's 3,660. Then at the end of the day, interest paid. So interest paid. Remember, the interest paid we still did that your finance cost, since we were not told we have any interest expense for the period. So you get it now.
Okay.
Then tax paid. So let's do a workings for tax. Let's do a workings for tax. So let's quickly make adjustments for tax. So tax 9 taxation. So balance brought forward for tax. Remember I said it can either be, it can be current year tax. You can see we have current tax
payable.
And you can see we have deferred tax, right? So for current tax is how much? Opening balance for current tax is how much?
8460.
Opening balance for deferred tax is how much? 3750. Now let's go for closing balance for current tax and for what? Deferred tax. So closing balance for current tax is what? 9240. Closing balance for deferred tax is what? 15. So income tax expense. So from the POL, income tax expense is what? So you can see we have both in deferred and current. Yeah. That's going to be, let me 6,000. Let me sum it together. 6,642 plus 2,208. That's 8,850. That's the income tax expense. So let's see tax paid. So tax paid is going to be 8460 plus, right? 3750 plus 8850 minus 9240 minus 15.
Tax paid. That's how now.
I'll call it tax paid. Tax paid. Okay, yeah, we're actually correct. Actually correct. Actually correct. So this will represent what?
Tax paid for the year, right?
Yes, 10,320. 10,320. So I think we are done with your question.
After all, you wasted space because say now after you fit delete them.
I hope it's not going to. It's not cutting. Okay, so there's an error here. You know that this is this. You know, normal it's supposed to be balance at the end minus
Minus balance at the open.
So because we are already having a negative figure, so if you minus
to be
minus,
plus.
it's going to give us plus. Sorry, plus this. That's what 6,238. So let's go. Let's sum all this together. Equals to this plus this plus this plus this. That's what 5,8. So this will give us cash, net cash flows
Oh, financing activities.
from financing activities.
Yeah.
Now let's check this equals this plus this plus this plus this plus this plus this. So this will give us net cash flows
Generated from
no,
investing
used.
activities. Used.
Yeah, because it's an outflow. Investing activities.
Wow.
Yeah, because it's an outflow now, you get. So let's do this. Let's sum this first. This. That gives us this. Let's sum this. This. That gives us this. So everything all together. And just do an auto sum. So that will give us what 7,740. So this net cash flows generated from operating
activities.
activities. So at the end of the day, let me use color for this figure. We have this figure. This figure. So look at it. I show this thing on. So let me see 7,740 minus 10,990 plus 5,880. That will give us that's what I'm doing.
Use equal to at the end.
740 minus 10,990 plus 5,800.
Plus.
That's 258. Yes. No, this is positive. This positive. This
Okay.
positive. It's giving us 2,550. And let's see the difference between this guy and this 3,688. So where did we miss something? I'm supposed to get a comment. Let me check. I think it's our own discipline. So that's 1,858. It's like it's positive.
From operating activities, I check your cash flow from operating activities. What do we have?
I'm coming. Let me see that cash equivalent at the end. Their own 1,858 is positive. How did they get positive? Let me see their workings. No. Let's check our own cash and cash equivalent. 930, right? And 933,810. Let me check this again. Equals to this plus this plus this plus this. It's negative. Why is their own having?
That's what they have now.
But their own is positive. Our own is negative.
Okay, what are you doing?
This plus this. This is it. It's negative. No? It's negative. How are they getting positive? Okay, let's flow with this. Let's check their cash flow from operating activity. Now their own is 12,902 because they did not recognize interest paid as an operating activity. So let me do something. This plus was
Minus.
It's still going to be less. So let's see. So let's look at it. 18,315, 5220, 1670, 385, 1230, 6690. So now 3675, 6105, 3660.
That's their 58. You have the 58 here. What did you see? Their 58.
Oh, that insurance premium. Okay, this insurance premium, yes, we are supposed to deduct it. You know, the insurance premium was as a result of it being omitted. It was as a result of it being omitted from the book. It was not recorded in the book at all. So, and you know, we deducted this from cash, Abi. So we are supposed to deduct it from here as well. As per se, it was not what
included.
It was not included. So let's do this again. So this will be this. That's 58. Okay. Now, so this 147 now be.
No, not correct. No.
I know. What's how will this thing give us 58?
You did 58 from that side now.
7477. So I want to do something now. This guy, Abi, So if I add back that, okay, I'm trying to check the correction. So if I take away
Your cash flow
this
from operating activities is
plus
correct.
this plus no, this I want to check something plus this plus this plus this 12902. So we are correct. So the difference between what they did and what we did is that we will recognize interest paid as part of what?
Working capital.
No, interest paid now as part of
No,
operating
like in
activity.
operating activities rather.
So why they recognize it as a financing activity? So we are on point for the big.
Just delete backspace. Enter.
So we are on point for the operating activity. So let's go financing. Financing is correct, 10,990. So let's check it again. This plus this plus this 2,492. So let's check this is 54 is here. This is 3,750. This is 3,750. This is 1,2. This is 1,2. Oh, is this 6,280 loan notes? Let's check the loan notes.
You said they were in the process of getting it now. So
No,
I thought it
like
was not acquired late.
the loan,
No.
that loan note. 12,780 minus 9,150.
The difference was so the difference is not 6,250.
Like I don't understand.
12,780 minus 6,500. Oh, it's
6,280.
Yes, 6,280. So okay, 2,522. So we are correct. So we have gotten 2,522. So it means that they added this. I don't know where they got this their own addition to. So so the difference here now, this 1,888, their solution was added. So let me see why added it. Let me check. Let me use calculator to calculate that part again. 3,880 plus 930 minus 6,550 minus 50. This thing is minus 1,858. I really don't know why they added.
No. Hold on. Go back. Do 3,810. Do 3,810 plus 930 plus minus 658. Let's see. Or put it on your Excel. Eh? There's no way this is going to be positive. There's no way.
Positive is negative. It's still the same.
There's no way this is going to be positive now. There's no way this is supposed to be positive.
So we are correct. Our solution is correct. So something is wrong, whether with their figures or there is a figure we are not. There is something we are not seeing in the question. So all our solutions are correct. So the only discrepancy there is the 1,858 negative that we have at the end, and 1,858 positive that they have at the end. So because at the end of the day now, because if you look back,
we calculated this our cash and cash equivalents first before we started, which is fine, and we got a negative balance, right?
Yes, no. And look at their own too. Cash and cash equivalents at the beginning 4,380. So this was what we got, 4,380.
Negative.
Yes, then I don't know why this is now. I don't know why this is positive. Honestly, I can't. Maybe later I'll check it. But our solution is correct. So let's just leave it at that. So we are having a difference of 3,716 from their own solution. I'll check it later to see if there is any discrepancy. So that's the solution to the question.
I don't even have this question.
Hmm?
I don't even have the question.
That's last diet, man. Last diet. I'll send the material, the file to So I think we are good now, right?
Mm-hmm.
So at least